What is happening, Michael Blanc community? This is Matt Faircloth and my good friend Michael Blanc asked me to come and talk to you guys today about raising money in today's economy, right? Now, let me just carve out a few things here, right? Let's just asterisk a few things. Raising money was done one way and it was done at one level of ease, let's say pre-pandemic and up until about 2022. And then today is just, it's a different market. A lot of equity is a little more skittish, it's a little more nervous, right? And so the efforts to raise equity are going to be different. The rules on how you raise money before 2022 and the rules on how you raise money after 2022 are very, very different. And people like me and Michael Blanc and his team at Nighthawk have learned it the hard way that we have to change our game up, right? And so we want to convey to you guys so you guys can be successful in your capital raising for whatever it is, be that small multi, big multi, whatever it is your goal is. I'm super committed to you guys being successful in your capital raising efforts, whether that's a couple $100,000 or a couple million, whatever it is you're looking to do. This video is intended to help you guys get there. So let's buckle in. Now, a few notes. My book, Raising Private Capital, is something you guys should check out. Raising Private Capital, a few reasons why you guys want to read this book is the book tells you where to look for money. Now, likely the money that's going to invest with you in your deal is someone who's already in your Rolodex. These are people that you know already. I'm dating myself talking about Rolodexes, okay? So for you younger folk out there, I mean your cell phone. This is likely where the contacts that are going to invest millions of dollars with you, be that in your contact base in your cell phone, be that in your social media feed, whatever it is, folks that are going to work with you likely already know you. There's not just privatemoney.com website you can go to broadcast your deal or anything like that. You're going to be looking to build your awareness for what you do as a real estate investor among those that are already in your database of people. Be that, like I said, your Uncle Charlie, your Aunt Sally, somebody you went to high school with and haven't talked to in 5 years, whatever it is. These are people that know you and they trust you and they like you. And they maybe would work with you if they understood real estate investing just this much better, and they would want to work with you on your deals. That is a lot of what's in Raising Private Capital. And Raising Private Capital tells you how to structure conversations, how to find the money that's right in front of you that you might know about, that's right in your phone, and how to put deals together, how to structure them, how to exit those deals, all those things, which is why for just a couple bucks, you want to pick up a copy of Raising Private Capital. Okay. Now, raising capital before 2022 was done just differently, right? Like, I hate to be like this, but it was it was almost too easy. It was just like fishing, right? So you would just, it felt like you hear about people just throwing deals out in their email base. And before you know it, they were full. And in a day, I've heard stories of friends that raise millions, like 5, 10 million in hours, not days, to get deals done. And that's because there was a large amount of equity looking for a home. And everyone knew that multifamily was a great place to go. Multifamily was growing quite a bit as an asset class. And it was just something that was seen as a profitable, viable investment with good security, with lots of upside. Multifamily still is all those things, right? But the market, because of everything that's happened with interest rates and with, unfortunately, some folks that are either doing, bad actors or whatever it is around multifamily, or people are just multifamilies become more difficult to raise money because of everything going on in the world. The view of multifamily is something you got to be careful, and it's something you got to pick the right operator. And just in general, it's been our experience that equity is not as flowing all over the place. And it's not just there's money in the streets that you can just dip a ladle in there and pick up all the equity you need, which is why I'm shooting this video for you guys. Because I'm going to give you guys 3 tips. How many? 3. 3 tips on how you guys can raise all the money you need today. Okay, so let's get going. Tip number 1 on raising all the money you need for your deals is this. You got to begin the conversations with your equity investors before you have a deal. Not when you have a deal, not after you got the deal under contract a month later, before you have a deal. You need to get your investor base warmed up, more so now than ever. And this was true before 2022 as well, but you could maybe skip that step and still do okay. Now it is a fact. Your base, again, the folks that are in your phone here, need to know that you are a viable, thriving real estate investor. And yes, you might have another profession. Yes, you might have other things that they know you for, but they need to start viewing you as a thriving, growing real estate investor. And that is an awareness campaign with those that are in your Rolodex. And that might mean email campaigns, emails to all the people that you have. Build yourself an email list. Every good capital raiser has a long list of potential investor emails. Okay. So that's something you should be building all the time, doing things like maybe you want to create something that's free for people to download, but to download it, they have to give you their email address. Maybe having a information only, not a pitch, but an information only webinar that people have to register for. That's a way to get email addresses. And obviously, you hopefully have a list of all the email addresses for people that you're friends with and whatnot. And if you don't, try and harvest them, get them, and build yourself a reasonable database of emails from people. Then maybe start sending out newsletters, start sending out articles you like, send out something maybe for like a podcast that somebody had on Michael Blanc's show or something like that. Send out that podcast episode. Hey, Michael Blanc, this guy I really look up to, interviewed this guy, this person, this woman. And I really love the interview. And here's what I liked about it. You guys should check it out too. Become an information source about real estate investing to those that are all around you, and they will start to view you as a source of real estate investing conversations, right? If you want to go one step further, if you've drilled in a bit and you've chosen a market that you're going to be investing in, maybe write up a brief article for those that are on your email list about why that market's amazing. Well, because this job supplier is coming in, or because this is happening, because that's happening, because economy's growing, or because all the reasons why you might like a certain geographic market in the US. Come up with some reason why you want to put it out to your investors, whatever it may be, right? Market, real estate knowledge, anything you got. Why real estate investing is a good tax benefit. All these, I gave you just a riffed off a bunch of reasons on emails you guys could send. So write those down and start popping off emails to those in your base, because they will already be halfway turned a bit towards the conversation of real estate investing from you, right? They might already know about it. They might already know about some reasons why real estate investing is a good thing for them to do, and is a good investment diversification play in their portfolio, right? They might already know about that. But they need to know that you are a source of that real estate investing supply of deals for them to invest in when you do have something. Okay. Now, a few notes. If you're going to be sending out awareness campaigns like that, make sure there's always a call to action, like hey, book a call with me. You want to invite people to talk to you. Don't make it difficult to get a hold of you. So use a service like Calendly or HubSpot or whatever it is for people to click and get on your calendar to have a conversation about real estate investing. Guys, that is key number one. And that's just really just running an awareness campaign with those around you so that they are aware of your real estate investing ventures. And they are, in essence, waiting for you to produce a deal so that they can hear more about it. I've seen too many people that begin conversations with their investor base once they have a deal. And I can tell you that given how, call it like just conservative or skeptical investor equity is right now, because some of them may have gotten burned, some of them may be involved in deals that aren't going well, but they still want to diversify their wealth. So they need to understand that you are a good, viable source, and it's going to take longer than it used to get that equity to the table. So for all of these reasons, you guys need to start doing awareness campaigns with people around you about real estate investing in general. Okay. That is key number one, guys. Key number two is once you do find a deal, you've got to be a little bit more overly conservative in underwriting. Back in, I say back in the day, but it's only a couple of years ago, more aggressive underwriting tactics would work, meaning like, okay, we're going to assume that interest rates are going to go up too much. We're going to assume that rent's going to keep doing what it's been doing, which is going up and up and up and up. We're going to make, let's say, more aggressive assumptions. And you can use phenomenal tools like Michael Blanc's Syndicated Deal Analyzer, the SDA, which is something that our company has used many years. Phenomenal tool. You can take that tool and you can design in conservatisms or more aggressive underwriting approaches. I recommend that you are conservative in a few certain metrics, be that whatever it is that you want to be conservative on, or the underwriting team you're working with. Things like rent growth, interest rate changes, cap rates over the future, and stuff like that. You guys want to be conservative around some of those things. And You want to tout those things as you put together your deal package to your investors. Investors will appreciate conservatisms. They'd rather, in talking to investors, they're going to be more excited about a very conservatively underwritten deal that produces 12 or 13% IRR than an extremely aggressively underwritten deal with assuming lots of rent bumps and assuming interest rates are going to go back down to 2.5% and making all kinds of, aggressive assumptions, let's say, and that produces an 18% IRR, right? Yes, the numbers are better on that second deal, but investors are looking for less risk right now. Given all the turmoil that's happened around multifamily, they want to see less risk. That's been the data that we've collected. That's what I've seen firsthand by talking to investors. So you will have more success in raising a deal if you put out something that is conservatively underwritten and you brag on that. Tell your investors, hey, just so you know, rent growth in this market, I'm just making up an example. Rent growth in this market has been 5% the last 3 years. We underwrote rent growth to be 2%, and the deal still works and produces a 12% IRR, 13% IRR, right? We underwrote no interest rate changes. Other people underwriting deals might say, well, the Fed just dropped rates, so that means they're probably going to drop them 5 more times. And so that means that interest rates are going to go back down to 2.5% in a year, right? Maybe it does happen. I don't know. Maybe it doesn't happen. And investors are going to appreciate conservatisms in your underwriting because it aligns with where they are. Conservative underwriting is lower risk. And if you present what you have as to be if you assign some lower risk characteristics to your deals and make that part of your marketing when you put together your offering memorandum and when you broadcast your opportunity to all those folks in your email list that are waiting for you to produce a deal, right? You're going to be more successful because people want to gravitate towards conservatisms, but they still want to build their wealth, but they want to do it with a little less risk these days. Okay. So that is tip number 2, guys. Okay, guys. The last tip that you're going to need to use to get as much equity as you need for your deals in today's marketplace is creativity, right? And that plays all the time. And really good marketers like Michael Blanc and like our company at DeRosa Group really know how to get creative. We like to try new things. And if you're looking to raise capital for either the first time or the 50th time, whatever it is, try on new tactics that might seem a little like, well, let's try this and see if it works, right? For example, my company, here's a real thing that we've done. I'll give you real creative things that we've done and things you guys might want to try as well. These are not the only things you can do, because that's what creativity is. Think off the wall of creative ways to raise equity. As long as you stay within the confines of the SEC rules, creativity is key. Here's a few things that we've done at our company. Typically, what was done in the past is, hey, we have a deal and we're going to be broadcasting it on this webinar next Tuesday at 5 p.m. Eastern. Register for the webinar, log in, and we'll tell you all about it, right? You and a couple hundred of your best friends, we're going to tell everybody all about this deal all at once. What we have found is that less and less people want to sit through a webinar. They want to maybe read an executive summary. They want to hear a little about it before the webinar. And maybe they're not available Tuesday at 5 o'clock. Maybe they want to watch a recording of it, or maybe they want to watch it when they do. So what we've done is we pre-recorded our deal pitch webinars, and then we took those deal pitch webinars and sliced them down into bite-sized chunks, like 3 to 5 minute segments, and we sent them out to investors in an email drip. That worked really well. And that's just a sign of creativity, because we put ourselves into the head of our investor and said, well, what do they want? They might not want to watch a 45-minute deal pitch. They might want to hear a little bit to see if this makes sense for them. And if they like what they hear, they're going to delve in and maybe they're going to join us. That deal I just described, the one that we use that marketing tactic on, that worked. That deal filled up very quickly. So you guys should try that too for deals that you guys have. There are other tactics, and talk to your SEC lawyer, because guess what? I'm not a lawyer. Michael Blanc's a super smart guy, but he's also probably not a lawyer either. So talk to a lawyer, a real attorney that can help you guys assemble your 506B or 506C offerings. And a creative thing that you can do if you talk to your lawyer, one thing that we've done is we've rolled out a deal as a 506B, which allows it to be for an accredited investor, accredited investors and sophisticated or non-accredited investors. You roll it out there, and you can't go, soliciting or shouting it from the mountaintop or putting it on social media. But what you can do is you put out a 506B that allows for non-accredited or sophisticated investors. You put it out just through folks you've already established a relationship with. You email it to them. And then once you feel like you've saturated that side of your investor base, you can then roll it up to a 506c. Talk to your attorney about that. It's called a 506b to 506c rollover. You can do that. That's a creative piece that you can do, and it gives you the best of both worlds. You got to do it with enough time, right? But you're going to do pretty much 2 marketing campaigns. One marketing campaign for your 506 for all your investors, because accrediteds and non-accrediteds can get in on a 506b. And if it doesn't fill all the way up, then you have the comfort to know you can roll it up to a 506c and maybe do some online marketing, do some social media posts about the deal, kind of take it more broad, right? That's another creative piece that you can do. But honestly, talk to other capital raisers, get into some of the communities that Michael Blank's put together, and ask those folks in those communities about how they're raising capital, what creative ways they're raising money for deals today, and then that's you're going to come up with creative ideas. Not every creative idea is going to work, right? So if you come up with a creative plan, understand it may not work, but creativity is what's going to be worth trying these new ideas. Not everything's going to stick, but some will, and some might raise you the money you need for your deal. Okay, guys. So those are your tips. 3 tips for raising money. What other ideas do you have? It'd be interesting if you guys put some comments below in the on this video feed here, and share some ideas that you've done for creative ways to raise lots of money. We want to hear from you. Put it out to the Michael Blank communities and that here in this video, so we can all chat about different ways that raising money has been working differently today and how you guys have been successful doing it. Maybe somebody watching this video will get a great tip from you, and they'll get their deal closed just from something you write in the comment section. So give it a shot. Guys, I really appreciate you, and I appreciate Michael. Thank you, Michael. Personal note to you for giving me a shot to put out some education for folks looking to raise capital for deals in today's marketplace. It's a different market, and that's kind of what happens, right? Everything changes, and that's the one constant is change. And change has certainly occurred in the equity world. And if you don't change your efforts around raising equity, you might be stuck doing things that don't work anymore, right? So constantly change your efforts, constantly be looking at what's working, what's not working, and be willing to make some tweaks and that to make things work. That's what I got for you today, guys. Hope you enjoyed this video. Please like and subscribe to Michael's channels if you do. Take care, guys.